Alright, so here's the deal. The US dollar has been chilling at the top of the financial food chain for almost 100 years, like the main boss in global currency status. But now, things are getting a little shaky, and it's mostly got to do with Trump pulling some major protectionist moves, flipping the whole global economy upside down.
It's very windy out here. We didn't want to bring out the big charts because it had no chance of standing. Fortunately, we came armed with a little smaller chart.
And that ever-growing mountain of US debt that's starting to make people nervous about the dollar's role as the world's go-to reserve currency. And low-key, that switch might already be happening. The dollar's been losing value for months now when you measure it against other major currencies, and recently the euro popped off and hit a 3-year high, which is wild considering Europe's economy isn't exactly thriving right now, and Trump's trade policies should technically be making the dollar stronger, not weaker. So now there are some European leaders saying, hey, maybe the euro is actually the safer bet moving forward, and it could even replace the dollar as the world's backup currency. So what we're going to do in this one is break down why the dollar might be losing its grip, and why some folks out here think the euro might be next in line to take that reserve crown. Quick pause though. If you're watching this and you're not already subscribed, go ahead and smash that button, because we're almost at 1 million subs, and your click seriously helps us keep making this kind of content. So here's the thing about reserve currencies. These are basically the MVPs of the money world, the ones central banks and giant financial institutions like to stash away because they're seen as super stable and easy to use when buying stuff internationally. The dollar got that spot because of some major post-World War II money moves, specifically the Bretton Woods agreement where the US stepped in and said, hey, let's center this new financial system around the dollar. Back then, the dollar was the only currency you could swap for gold, and all the others were locked into fixed rates with the dollar. Even though the gold standard ended in the early 70s, the dollar still held its spot at the top and has been the dominant reserve currency ever since.
The strength of a nation's currency is based on the strength of that nation's economy. And the American economy is by far the strongest in the world. Accordingly, I have directed the Secretary of the Treasury to take the action necessary to defend the dollar against the speculators. I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets, except in amounts and conditions determined to be in the interest of monetary stability and in the best interest of the United States.
Holding down more than half of all global reserves, the euro showed up on the scene in 1999 and became the runner-up, slowly gaining ground on the dollar at first, jumping from about 23.6% in 2002 to 27.6% by 2009. But then came the Eurozone crisis in the 2010s, and with the US economy growing faster than the EU during that time, confidence in Europe started fading. The euro's share of reserves dropped to 19% by 2015. As it stands now, the dollar still controls around 60% of global reserves, and gets used in about 90% of international transactions, which is still pretty dominant. But lately there's been this growing anxiety, especially since Trump started making some unpredictable economic decisions. These moves made people question if the dollar is still the safe haven it used to be. And you could really feel that shift earlier this week when for once the stock market dropped, the dollar dropped, and US Treasury bonds dropped too, all at the same time. Normally, if the stock market's tanking, investors rush into safe assets like the dollar and Treasuries, which usually push their value up. But this time, everything was going down together. That's a red flag because it means people are pulling their money out of the US entirely, not even trusting the dollar to be the fallback. And this growing doubt around the dollar's safety comes from a few major red flags. First off, the US is printing out insane levels of debt right now, which has people thinking either there's gonna be a default, or the government's gonna try to deal with it by cranking up inflation. Second, Trump's been talking about purposely lowering the value of the dollar to boost US factories and bring back manufacturing. And third, he's been throwing shade at longtime allies and going hard with sanctions, making foreign investors nervous that their dollar assets could just get locked up or seized. So yeah, people are starting to ask, if the dollar's not it anymore, what is? Some folks bring up the Chinese yuan, but that option's got problems. For starters, China's still got tight capital controls, meaning the government can block how much money flows in and out, which isn't ideal if you want a currency to be global. Plus, China's been known to devalue its currency on purpose to keep exports cheap, and that kind of manipulation is a big no from serious investors. So that kinda leaves the euro, And like we said earlier, the euro looked real promising before the Eurozone crisis, but it took a hit. Lately though, if US growth keeps slowing down and the EU keeps moving towards stronger unity, then the euro might start looking like the least risky option. It sounds kinda backwards, but the idea of more Eurozone countries issuing more debt might actually help the euro's case. Right now, Germany is tossing out its debt brake rule so it can drop serious cash into defense spending.
Proved a plan to break with generations of tradition and amend the constitution to allow for borrowing of up to €1 trillion to spend on defense and infrastructure.
And on the EU level, leaders are floating the idea of releasing more joint debt to help Europe build up its military. That might seem like a red flag at first, because usually when a country's throwing out more debt, people worry about economic health, but actually one of the biggest reasons the dollar has stayed king for so long is because US Treasuries are basically the world's go-to debt instrument. Treasuries have become the reserve bonds of the world, and yeah, the US borrows a ton, but that's kind of the point. There are so many treasuries out there that they're easy to buy and sell, they pay interest, and they're super liquid. That combo creates a cycle. Dollars are valuable because you can use them to buy treasuries, and treasuries are valuable because you can always sell them back for dollars. So both keep propping each other up in this financial loop. Germany and the EU haven't really been able to compete, because there just aren't enough German or EU bonds out in the wild. That makes the market for them kinda dry, not very liquid. But that changed a bit recently, when Trump's tariffs pushed investors to ditch treasuries and scoop up German bonds instead. So if people start losing trust in the dollar while Germany and the EU begin pumping out more bonds, those euro-backed securities could slowly chip away at the dominance of the dollar treasury combo. And no, the euro probably won't fully take over anytime soon, but it could definitely grow its slice of the pie if the global economy keeps looking for ways to spread out its risk. And with all the wild stuff happening in politics right now, especially with Trump shaking the global table and world events feeling more chaotic than ever.
Because we have a big job to do. No other president would have done what I did. No other president. I know the presidents, they wouldn't have done it.
This is one of those stories you want to keep an eye on. Like one day you'll wake up and wonder how the dollar went from the default currency to just one option among many. And real talk, we've got more content diving into US politics and world economics. So if you like the mix of chaos and clarity, hit that subscribe button right now. Seriously, we've got more videos coming and you don't want to miss them. Now let's take a quick detour into the fun side of things. If you've ever caught our WTF USA series, you know we break down all the bizarre stuff happening in US politics and culture, like when Elon Musk starts calling random people enemies or politicians say the wildest things in press conferences. It's more chill and a bit more chaotic, but still super informative, and if you're tired of ads and just want pure unfiltered videos, you can check out our full catalog on Nebula. It's this creator-run platform that's home to all kinds of next-level content, including early access to our videos, deep dives like this one, and exclusive series you won't find anywhere else. Creators like Real Life Law, Legal Eagle, Wendover and Tom Nicholas are all there too, and the vibe is way more community-focused. We're also hosting features on big themes like climate change, tech monopolies, and cultural shifts, without the clickbait or interruptions. If you're not already signed up, hit that link in the description, and grab that 40% discount. It's just $36 a year or $3 a month, which is a steal considering how much content you're unlocking. Anyway, the takeaway from all this: the dollar's not going down without a fight, but the euro is slowly building momentum. It's like a game of financial Jenga, and each political move, each debt decision, every interest rate shift could be the piece that tips the tower. We're watching this unfold in real time, and whether you're an economics nerd or just curious about what money means for power, this is the kind of stuff that shapes the future. Big thanks for watching, and before you bounce, don't forget to like the video, drop a comment on where you think things are headed, and join us on Patreon if you want to vote on our next video topic and support this channel directly. Peace.